morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two.
Good morning. Good morning. How are you?
We've got big news. Paraguay is going to be introducing a Bitcoin law, so we'll definitely be keeping an eye on that. Actually, we've got a tweet, Carlitos Reala, the opposition politician in Paraguay, tweeting, "I am here to unite Paraguay. That is why we decided with Senator F. Silva Facetti to present together the bill Bitcoin on Wednesday, July 14th today. Stay tuned since there will be a mega surprise for Paraguay and the world. Something giant is coming." So how will this be different or the same, Emily, as what we've seen in El Salvador?
It seems like it's actually quite different. This is more about regulating cryptocurrency. El Salvador is taking a very bold move in adopting Bitcoin as a legal tender. So, I mean, it's in the same spirit, but I think actually the way it will play out will be quite different.
Yeah, I mean, we have to remember too that Paraguay is the thing about Paraguay is that it has a lot of hydroelectric energy that's being produced right now from the Itaipu Dam, which it shares with Brazil. And they're right now in the process of renegotiating some of the terms of that because they're paying off the debt on that dam. And that's going to be key because of all that energy that they currently produce, a lot of it gets sold to Brazil at a low price. They need to use that energy for something more profitable. And having the ability to use that electricity to make money through Bitcoin mining is, a way, in many ways, a better leverage that they'll have against Brazil when they renegotiate their deal.
And we've had Carlitos Reala on the show earlier in the year talking about this bill, and it seems that he is an opposition leader, so we're not clear that it has the full support of the legislature and how far it will get, but it'll be certainly interesting what the bill exactly says when it's presented in the legislature today. Okay, so checking in on Bitcoin, let's have a live look at the CoinDesk Bitcoin price XBX index, and it's currently trading at $32,370 and change. Bitcoin is slightly down about 0.1%, so trading pretty flat over the past 24 hours. And the CoinDesk Ether price ETX index right now at 1948. ETH is slightly down about 1.3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. All right, well, Caitlin Long, a pioneering force in the crypto industry at the head of Avanti Bank, tweeting a regulatory crackdown in the United States has begun. I believe we have that tweet as well. It won't impact Bitcoin or Ethereum directly, she says, but it'll impact intermediaries and US dollar access points. And joining us now to discuss is Caitlin Long herself, founder and CEO of Avanti Bank in Wyoming. Welcome to the show, Caitlin. So you have a really interesting tweet thread that you tweeted out earlier this week. You say a regulatory crackdown is happening and most people in the crypto industry don't even realize it. So explain to us in really simple terms, what exactly is going on?
Oh, well, a lot of folks do realize it. If you're watching what's going on crypto Twitter, there are a number of folks who have around the world, not just in the United States, talked about changes in the ability to move money in and out of exchanges, especially fiat currencies. So we've seen this drill before in our industry so many times, and it seems like it's happening again. It does tend to happen, towards the end of bull market cycles. So in some ways, we're repeating what happened in 2017.
Well, specifically in your tweet thread, you talk about the Fed is proposing a payment system access guidelines, and this is. Perhaps you can go into explaining why this is important and why crypto Twitter should be having an eye on this.
Well, this is a piece of the puzzle. The Fed proposed this back in May, and a lot of it has to do. They didn't mention crypto at all in the proposed guidelines, but a lot of it has to do with the fact that you have a couple of new types of charters that are specializing in providing services to digital assets. that are asking for direct access to the Fed. The first group of bank charters is the Wyoming Special Purpose Depository Institution, or so-called Speedy Banks. That's Kraken, Avanti, my company, as well as WDT Financial, all of whom are chartered, more to come. And then you have that flurry of OCC trust banks that were granted conditional charters early this year that are under review. They're not technically eligible to apply for direct payment system access, but it pushed the Fed. And so even though the Fed did not mention cryptocurrency in the original publication, that is in large part what it was aimed at. And now the question is, since the public comment period, which was a relatively short public comment period, only 60 days, since that comment period is over, what now is the Fed going to do? The Wyoming Speedy Banks are eligible for access to the Fed payment system, and we are knocking on that door. And we've been waiting. They've slowed us down, no question, but I think this is going to be a big deal for our industry when it happens, which we're pretty confident it will.
Mm-hmm. And you mentioned that access to U.S. dollars and bank accounts is integral to the crypto industry. And I wonder, is this a signal that the financial system will never really be independent of fiat government banked money?
Well, the on-off ramps matter. And even to, the hodlers and maximalists among us, everybody got in through some sort of a fiat access point. And they do matter. And in fact, actually, as you were just talking before this segment about El Salvador, El Salvador's banks are U.S. dollar banks because right now the legal tender in El Salvador is the U.S. dollar. And that is an access point for U.S. dollars that happens to come offshore. Will there be any sort of reduction in that access point? It remains to be seen. There's some chatter in Washington about controlling those access points. But again, this is not new. We go through these cycles, and the only folks who will see this as new are those that weren't here in 2013 and in 2017 when we saw this movie play out again. It does seem that there is a reduction in fiat currency access points that tends to happen towards the end of bull markets, and that tweet storm that you put up talks a lot about the history of that in 2017. There were a lot of companies in our industry that had to close their doors, legitimate companies that the startups failed because they lost their banking access.
Good morning, Caitlin. So nice to see you on the show. So I remember talking to you a couple years ago about sort of this in a whole more of a global context. So even though Wyoming has been like a total front runner in the crypto space, you've been critical in the past of the US, right? And just like the US regulatory environment. And, as you said, this is kind of a cyclical thing. But I think we had this conversation maybe 2 years ago. Are things getting better? Are they getting worse? Because right now we're seeing countries all over the world. I mean, El Salvador is a very extreme example, but countries all over the world really upping their game on crypto. Where is the US fit in globally? Are we catching up? Are we still where we were 2 years ago? What needs to be done? I'm just curious of your macro view of this problem.
Yeah, great question. I remember that conversation 2 years ago for sure. There's a range. And by the way, it does not cut across political parties. Just like in the Trump administration, there were pro-crypto and vehemently anti-crypto people. The same thing's true in the Biden administration and within the Federal Reserve itself. The Federal Reserve is really the only agency that has not yet taken action on crypto, right? So when they do, I think it's a big deal because that's everybody in the industry, to the extent that the Fed decides that they don't want any companies having access to the banking system, every company in the industry would be impacted. To be clear, though, that is not what I think is happening. Not at all. The themes that we're seeing coming out of Washington, and it's almost a daily drumbeat. I've been chronicling it since April on my Twitter account because I'm watching it so so closely for Avanti. But there's been almost a daily drumbeat of regulatory news. And the theme seems to be, we're not going to try to ban this. We're going to control the US dollar access points. And everybody in this industry has to get regulated, and you've got to play by the rules, and you definitely have to comply with the Bank Secrecy Act, which is all the know your customer and anti-money laundering type of laws. And as long as you do that, then you're going to be okay. But to your point, Emily, what we haven't had in the U.S. is clarity on where the guardrails really are. There hasn't been a way for a crypto native company to get direct banking access with the Fed. None of the companies in this industry can bank directly with the Fed. Every one of us has to go through an intermediary bank. And that means the Fed can't watch this industry grow and can't, you've seen the Fed now starting to talk about some of the systemic implications of stablecoins. Let me give you a stunning fact. At the beginning of this year, PayPal had 33 billion of cash for customers. It's a fintech, not a bank. And the stablecoin industry had 27 billion. The stablecoin industry is now at 101 billion. Okay, so what we've done in this industry in the first 6-ish months of the year is add more than 2 PayPals the size of non-bank quote unquote deposits, right? This is a big deal.
Caitlin, along those lines, though, it is of concern to, as you pointed out, the Financial Stability Oversight Council, which Secretary Yellen oversees. They are, from reports that at least, that there is a potential of regulation of stablecoins because there are some questions, obviously, about how people get into them, what they do, where the assets go, et cetera. So what do you see ultimately coming out of that, potentially, out of the FSOC? What do you see them doing to regulate stablecoins? What's their worst case scenario and what's the most likely scenario?
Well, last week, to your point, there was a leak that FSOC, which is the oversight council of all the different financial regulators in the United States, it does want to regulate stablecoins. And it's because of what we just talked about, right? This starts to have systemic implications given how big it's become. There were big fights over whether non-bank fintechs should be allowed to become as big as PayPal is. And now we've got 3 times the size of PayPal in this industry that popped up in their eyes almost overnight. And so what's likely to happen? The leak is, I know as much as you know, we're all reading the same stories in the newspaper. The leak said that FSOC wants the Fed to regulate stablecoins, which makes sense because the Fed has the prudential regulatory responsibility over the whole financial system. And they also regulate those US dollar access points. Every single dollar that goes through that anyone transacts with, whether onshore or offshore, ultimately clears through the Federal Reserve.
So what do you see as the worst case scenario? What do you see them doing?
Oh, well, essentially telling, if we go back to the way money market funds came about, that was Merrill Lynch in 1977 taking on the banks. Right. And what evolved is that money market funds got registered with the SEC. So places where you can store cash, generally bank deposits and money market funds. And the question then becomes, will stable coins be a third leg of the money market? And if so, I think you can expect that it's going to be regulated. And so there are a couple of different ways it could go. It could be telling stablecoin issuers, you must register with the SEC. Just like money market funds, or it could be go get a bank charter, or it could be some combination thereof. But what's fascinating is potentially it does require Congress to act, depending upon what they do. And as you know, Congress is pretty much paralyzed. So yeah, right.
But they are trying to push through the taxonomy legislation, albeit slowly. But there are efforts in the House now.
There are efforts, absolutely, but nothing's moved. And what's fascinating is the Wyoming SPDI banks just coincidentally are sitting on their doorstep and don't need any congressional action and wrapped up in a bow and ready to go. So will the Fed use that as one of its tools? We don't know. This is all out in public now. We haven't been talking about it at Avanti, but we're at the altar with the Fed, just like Kraken is. And just like WDT Financial is, and is this bank charter one of the solutions that they will end up using and telling folks to go get a bank charter? And if that is the case, we know there are lots of companies in this industry circling. And if the Fed actually does grant access, then I think a lot of companies will end up coming into Wyoming and registering. But they may not go in that direction. They may go in the direction of treating them like money market funds and requiring them to get registered with the SEC. And again, this is the ones that actually touch US dollars. I'm not talking about the algorithmic stable coins because those don't actually touch US dollars. There's not that much that the algorithmic that regulators can do with DeFi, with the algorithmic stablecoins, other than just, again, control those US dollar access points.
Senator Elizabeth Warren has written in to SEC Chair Gary Gensler about what exactly is the role of the SEC. And it almost seems as if she wants some clarity on that, and in effect, clarity on what Congress can do to step in that regard. We had Senator Pat Toomey on yesterday. He shared his thoughts on the SEC and crypto regulation. Have a listen.
It's not at all clear to me that the SEC has a role in regulating cryptocurrencies. Cryptocurrencies are not securities, and the SEC regulates securities. So that's not at all clear to me that follows. And I'll be watching very, very closely to see what the SEC does.
So, Caitlin, cryptocurrencies are not securities. Do you agree with that statement? And furthermore, I would love to get your reaction to Senator Warren's letter.
Sure, some are securities. Most are not. I would agree with that. Some are. But it's so funny to see Congress asking the SEC what it thinks its authority is, because Congress writes the laws. And this underscores that both Senator Toomey and Senator Warren are on the Senate Banking Committee. If the Senate were able to move, they would just do it. But it's all paralyzed right now. And so I think expecting action to come out of Congress that actually results in a law that gets signed by the president, there's a very low probability of that. And so the question then becomes, how did the regulators operating within existing laws use the powers that they already have been granted by Congress? And that's where, watch the leaks from FSOC, because FSOC definitely does have the authority to get the different regulatory bodies, including state regulators, to work together to protect the integrity of the financial system. And again, it makes sense that the Fed becomes the regulator of stablecoins here.
Caitlin, real quick, I just don't know your view on this. What do you think about this idea of the Fed issuing a central bank digital currency or digital dollar? Because we're seeing these actions pick up all over the world. Do you think this is a good idea?
Well, it's plausible, right? I think all of us understand, including a lot of folks inside the Fed, that the U.S. payment systems have atrophied, right? Think about ACH. Think about how easy, or rather how difficult it is to move money. And being one of the banks that's in the weeds on the integration with those payment systems, oh boy, there's a reason why it takes it really does take 18 to 24 months once you start a bank to get the doors open. And a big chunk of that is the integration work that has to be done with the legacy payment systems. They are, in many cases, not even API based. Most of the providers that integrate and provide those integration services with the Fed don't even offer APIs. And so it is tedious work. And that's one of the reasons why our payment systems are not great. And so Brian Bishop, our CTO, who's a Bitcoin core developer, put it very well. Stablecoins offer straight through integration, whereas the best that the legacy payment rails offer is straight through processing. And again, most of the banks don't even offer APIs these days. Most of the time when you're sending an ACH or a FedWire instruction, you're typing it into a form. And businesses are sending flat files back and forth, right? This is old technology, and stablecoins are by far better technology in large part, because they're just easier to integrate with. And I do believe stablecoins will become globally systemic, important technologies. And the banks will integrate with them. These are not going away. And so now we're back to that age-old, decades-long debate. Should everything be inside the banking system with a bank charter, or should fintechs continue to operate outside the banking system and just get their US dollars directly through banks? That has huge prudential regulation and financial systemic stability implications, that very decision.
And a lot of power at stake. We've got to wrap it there. Unfortunately, super fascinating conversation, Caitlin. Really appreciate the catch up, and thank you for sharing your insights as you monitor what's going on in DC.
Thanks to everyone.
All right, that was Avanti Bank CEO Caitlin Long. Coming up, checking in on Asia and the crypto markets update with Jan van Eck.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at 32,677. Bitcoin now slightly up about 0.5% for the past 24 hours. And the CoinDesk Ether price ETX index is at 1974, still just under 2,000 and trading pretty flat over the day. Joining us now to discuss the crypto markets and more is a pioneering force in the ETF world, Jan van Eck, CEO of Van Eck. Welcome to the show, Jan. So first off the bat, would love to get your outlook on Bitcoin. Seems that we are in a very narrow trading range, Bitcoin and the crypto markets trading sideways. What do you see, any breakout, if and when that may happen?
I'm not really good at price predictions. We're still long-term big believers that Bitcoin will be a store of value alternative in investors' portfolios. And I think Bitcoin is just continuing to mature. I think it's still probably in the early innings. So, it definitely needs some time to consolidate. To me, if it holds these levels, that it's corrected, I'll call it 50% from the highs, that's a huge sign that it's matured, that it has more institutional adoption compared to previous 80% drawdowns. So, I have no particular insights other than any other investor on that.
Fair enough. Well, I mean, you're the pioneer in ETFs, so would love to get your thoughts on what is the status of a Bitcoin ETF in the United States, and will it actually get passed this year? Is there any reality to that?
Well, at the rate of discussions now, I would say no. There is dialogue with the SEC. There's a lot of regulatory discussion, as your prior guest alluded to. The regulators are definitely engaged, but I think people are still looking for direction, and to a certain extent, direction from Congress. Commissioner Gensler has said that he wants more regulation of crypto exchanges before an ETF should move forward. So I think that's the debate that's happening right now.
I'm curious what your outlook is on for some of the other coins besides Bitcoin, like Ethereum or some of the or DeFi. I mean, do you see these other digital currencies moving in tandem with Bitcoin going forward, or kind of moving in separate directions?
That's actually a topic that's really top of mind for me as we speak with investors, because I think there's a lot of lack of knowledge. I mean, what I call this is open source blockchain database technology, and it's really disrupting finance across the spectrum. So we look at brokerages and exchanges, we look at banking and lending, and we look at the payment system. All three of them are going to be disrupted to a major extent by blockchain technology. And I think most investors are fixated on Bitcoin and maybe Ethereum, but they don't really understand some of the underlying trends that are happening and what the opportunities are for their portfolio. So what we're saying is, listen, take a look at Bitcoin. That's almost a separate asset class from Ethereum and other smart contract software protocols. And the way investors should think about those smart contract protocols and other companies in the space that are coming public is that these are growth companies, they're fintech companies, and they are going to leapfrog some of the existing companies that are the mainstays of traditional players. I mean, these are obvious trends, but I think investors do not really understand the opportunities for these new companies. So, for example, Coinbase is the most well-known. Its market cap is more than twice that of NASDAQ, and that's in the brokerage exchange space. But Circle announced that they were coming public through a SPAC. That's in the stablecoin space. So, we see this manifesting, that very valuable companies are being created on blockchain and cryptocurrency technology, and the market is pricing it, but I'm not sure all investors are really understanding what is happening at such a fast rate right now.
You mentioned Coinbase, but just on sort of the digital asset level, are there any specific opportunities that you'd like to point out that you feel like investors are missing?
Well, I mean, I would say the two categories that are interesting are number one, DeFi, which is the lending space. And DeFi was not even probably a thing 2 years ago. We had the DeFi summer of last year, and now maybe we have 60 billion ballpark, a little bit less than that, locked in and earning yields in the DeFi space. So that's one. We have all those protocols, and that space is also developing. It's been largely algorithmic, largely offshore, which the regulators don't like. So now they're working on Aave and others are working on permission pools, meaning making it available within a AML KYC framework. So that's a category that I think is, again, not undiscovered, probably potentially overvalued, but still very interesting. And then the second theme that we like to talk about, or beginning to talk about at Van Eck, is the smart contract area. So these are the sort of the building blocks, smart contracts. Everyone in the space knows what I'm talking about, but I'm also trying to explain it to investors outside the space. Ethereum is clearly the leader by application, by market cap, by many dimensions. It's undergoing a dramatic change this year, right, from proof of work to proof of stake. So you can actually look at some of the other smart contract protocols that we think investors should be focusing on, because if you will, if the blockchain is going to work, then these are the base layer sort of platform companies that applications have to be built on. So that category includes others like Solana, Tron, Avalanche, a whole bunch.
Hi, Jan. One of the direct Gabor Gurbax, he was on Twitter, and it seems he didn't quite understand the issue with stablecoins being potentially regulated as securities if they're backed by things like commercial paper and other countries that aren't necessarily related or liquid as short-term treasuries or cash itself. And that appears, as our previous conversation we just had with Caitlin Long, that is clearly something that FSOC is looking at right now. And regulators also are looking at that. Do you recognize that as an issue, that the potential of something like a tether could be regulated as a security from, let's say, the SEC because it acts like a open-end fund? Do you recognize that as a problem and as a potential reason as to why companies like yourself can't get an ETF on Bitcoin out in the market?
I don't know. I look at stablecoins as a very different regulatory issue than maybe a Bitcoin ETF, but I think stablecoins are a huge part of this payments, right? I said there's a three-legged stool, if you will, of disruption hitting finance, and payments is one of them. It's not just through stablecoins, but stablecoins is part of it. Let me sort of give you some background. So I think one of the most interesting parts of this payments revolution is addressing the remittances space. And I think this is a real life application, right? So money being earned in one country, say the US, and being sent to another country, say Mexico. There are startups like Bitso that are providing this kind of remittances capability at a fraction of the cost of Western Union. So instead of taking 6.5% out of the dollar, they're taking less than 1%. And their market share is exploding. So they're not using necessarily stable coins, they're just using the fact that 85% of Mexicans have smartphones and only 50% have traditional banking accounts. So let's talk about stable coins. So that payments revolution is happening maybe hand in hand with stable coins, but not completely dependent upon stable coins. Let's talk about stable coins. I think in the United States, sure, they look and smell like Chairman Gensler said, very much like money market funds. And if they want to regulate them, I think the industry can provide a solution as long as it doesn't slow down the technology advantages of stable coins. I think all of us would just benefit from greater regulatory clarity and speed at this point.
But does the idea that these stablecoins might not be backed, and it's actually already admitted that they're not backed by dollars, and the potential that their value at least is not in fact a dollar, and that could be having an effect on the crypto markets themselves by inflating prices or at least not arriving at a true price? Is that an issue that you're coming across with when talking to the SEC?
Yeah, we're not talking with them about stable coins at this point, although I think it's an interesting area. My understanding, though, is that if you will, the traditional stable coins are 100% backed by assets, right? So it may not be cash, but it could be short-term securities. I don't think they're phantom backed. Now, there's the algorithmic type of stable coins as well. That's a whole other kettle of fish, right?
Yeah, it is, but in fact they aren't one-to-one backed, and that is documented. It's not even that's the admission, for instance, of Tether, that they are using commercial paper. They won't admit where the commercial paper is. It could be in China. It could be Chinese real estate commercial paper, for all we know. We don't know exactly what is backing the stable coins, and that if the SEC and other regulators look at it, they're saying, you know what, this isn't really a stablecoin, but it's more like a security, that there's a separation between, let's say, what USDC does and what Tether does. But nonetheless, Tether is a huge part of the market. So is that affecting the price of Bitcoin and ultimately your ability to get the ETF done? Do you see that connection?
Yeah, I mean, look, I'll just call those traditional stable coins. They look and smell like money market mutual funds, and there's hundreds of billions of dollars in money market mutual funds. They are not without their own systemic issues, as we found out during the financial crisis, when the number of those funds held Lehman Brothers paper, right, that had payment problems. So I think they are and should be and can be regulated like traditional money market mutual funds. Tether is such an innovative product that has facilitated trading on exchanges, but I don't look at it as inflating the price of Bitcoin, to answer your question, at all. Mm-hmm. It's actually just a great market solution to a regulatory problem and the problem with the slowness of our traditional banking and financial institutions, right? It provides instantaneous trading. And that's why I think these crypto exchanges are going to be so powerful in the future, because they really are the future. That is how securities should trade, instantaneous settlement. And that's why I think why don't they get regulated and have all securities markets move to the crypto exchange platform? I think that makes a lot of sense to me. And I think that's why.
All right, Jan, we gotta wrap it up there. But appreciate your coming onto the show and giving us an explainer, because we have all sorts of viewers out there who may be new to the space. So appreciate you also going to detail with that. All right,
nice meeting you all.
That was Van Eck CEO Jan Van Eck. Coming up, a look at Asia and an NFT social media platform. More on that next.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, July 14th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, India's ICICI Bank blocks international crypto transfers. Korea says banks must report crypto-related money laundering crimes, and fears over plagiarism hit the NFT world. Let's get you up to speed from Asia to the world. India's ongoing crypto acceptance saga has taken another turn. One of the country's leading financial institutions, ICICI Bank, has warned against using its international remittance services for transferring any form of cryptocurrency. The Bharat Express reports that bank customers must declare that remittances will not be used for investment in or purchase of any crypto or virtual currencies. Customers also being warned that funds should not be transferred to any businesses dealing in crypto, nor can they be in the proceeds from investments in cryptocurrency. The CEO of Indian trading platform Unacoin says investors may not be overly worried, though, as the domestic market is healthy.
In India itself, the market is quite matured enough. We have here up to $100 million volume sometimes.
India's banks have been seeking to limit exposure to cryptocurrencies since the Reserve Bank of India, or the RBI, issued a circular banning crypto in 2018. Despite the ban being overturned by the Supreme Court a year later, confusion still exists over the status of crypto in India. And that's because lawmakers are still considering legislation that could outright ban crypto in the country altogether. And so each development in the country is an important clue to what will ultimately happen in India. Same could be said about South Korea. Korea's National Assembly scrutiny of crypto industry regulations continues. The latest. Authorities say banks will not be reprimanded in money laundering cases involving crypto exchanges. That is, of course, if they report the crime first. However, if the Financial Intelligence Unit is not informed about anything banks witness, then the banks will be blamed. That's in addition to Financial Services Commission head Eun Sung-soo saying that foreign crypto exchanges dealing with Korean investors will have to abide by the same stringent rules that domestic exchanges must comply with. Now, 4 crypto bills were also on the table at the recent National Assembly meeting, with Eun saying the FSC is studying and reviewing them all with the assistance of both the Ministry of Science and the Ministry of Finance. And now on to the markets. Bitcoin down almost 4% at just under $32,000 US. That's as of 4 p.m. Hong Kong time today at the end of the Asian trading day. And in the top 10 for cryptocurrencies, Polkadot almost down 9% and Cardano down just over 7%. Meanwhile, the eastern Chinese province of Anhui has become the latest to halt crypto mining. Local media outlet Hefei 365 reports that scarcity of electricity triggered the ban, with the local energy bureau predicting that demand will reach 1.5 times the current supply level by 2024. Now, authorities have already halted mining operations in Sichuan, Yunnan, Qinghai, and Inner Mongolia, prompting a mass exodus of miners from China. Despite the bans, though, one player in the industry says miners should not just leave.
这种出海呢，其实也是没有组织和策略的，就各自为战啊。那么结果就是抬高了市场的价格。希望呢，就是国内的这个挖矿企业呢，就是能够自救，但是呢，也要冷静啊。
And here's a little bit of a twist. Coverage of this mining exodus story in China has also fueled concerns over plagiarism in the NFT world after an image used to illustrate the story went viral. That photo of a woman holding disused mining rig gear was originally published by China's Caixin Media. It's now been used to create a number of NFTs, which are available for sale on the OpenSea NFT platform. However, the artist has chosen to remain anonymous, which raises questions over whether they had permission to use the photo in the first place. Forecast News has asked Caixin for comment, but received no response by the time of this report. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Miami-based Nifty's is launching what it claims to be the first ever NFT-focused social media platform, kicking things off with a collection featuring LeBron James, Bugs Bunny, and other Looney Tunes in the Space Jam sequel set to be released this Friday, July 16th. Joining us now to discuss is Olta Andoni, Chief Legal Officer at Nifty's. Welcome to the show, Olta. So explain to us, first off the bat, what is an NFT-focused social media platform? How does that work?
That's a great question, and that's what we're trying to do with Nifty's, and very excited about this launch yesterday. First of all, we are trying, as the very first focused social media platform, we're trying to bring together collectors, publishers, and brands and creators, and also to be able to address the necessities that the NFT space needs for these NFTs to be more accessible, to be more easy to use, for technology and other economic barriers to not impact the way how users are going to use the platform.
Also, does the world need another social media platform? I mean, we seem to have so many, and they all seem to be chaotic and detrimental to humanity, apparently. Do we need another one?
I don't think that is going to be applicable to Nifty's because we're not a social platform in the sense of social platform. We're trying to put the NFTs on a social platform for the users to be able to access and to share and to enjoy the experience, because not many platforms are doing this. Majority of the platforms in the space have been mercenary, meaning buying, selling. That's why Nifty's is going to be different, because we're going to provide our users with a completely different experience, not only to use, but as I said, our platform is going to create a new space for collectors in order for them to be able to share and to create their own playlist with their favorite NFTs. You just don't need to buy any single NFT out there. And that's what I previously mentioned, that the economic barrier shouldn't be impactful.
So what exactly is the pain point that this is addressing, or the problem that this is trying to solve?
So with majority of the NFT platforms, not many are able to share and to collect the NFTs. And what we're trying to address with Nifty's is that not only you're going to be able to collect and share those NFTs, but you also are going to have a little bit more clarity or creativity on using your platform. And also being inclusivity is another element that majority of the NFT platforms are missing in the space, and also having the power to make this NFTs accessible on our platform. So I don't think that there are other platforms doing this right now here in United States. As I said, we're just trying to step away from that only mercenary aspect that majority of the NFT platforms have right now.
Alta, I know I just kind of going away a little bit from the topic right now, but I don't know if you heard some of the previous conversations we had with our other guests. I know you have some pretty strong opinions on stablecoins. What's your thought in terms of regulation as an attorney? How do you see regulations falling out in terms of how stablecoins that aren't, let's say, dollar-backed entirely? What do you think will happen?
I think that, and I just wrote an article about this recently on CoinDesk. I think that right now in the space we're not looking, or we're not having that sort of support from the regulatory approach from the government. In regards to stablecoins, I think that for government they consider also as Caitlin mentioned previously, also the negative aspect that stablecoins may have. It's just important to concentrate mostly on what we're looking forward to the regulatory aspect right now, and also to be able to understand a little bit and have a little bit more clarity from many regulatory bodies.
Okay. Olta, very great having you on the show. Good luck on the NFT social media platform being released. Appreciate you coming on the show.
Thank you. Thank you.
All right, that was Nifty's Chief Legal Officer, Olta Andoni. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christina Lee. I'll be back live at 3 p.m. for All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.